The benefits of an FHA loan. If you're a first-time home buyer or interested in purchasing a home and maybe not a first-time home buyer, you may consider an FHA loan. Today, we're going to review the benefits of an FHA loan and we'll touch on the pros and cons of an FHA loan as well. So let's get right into it. First, you may wonder, what is an FHA loan? FHA loans have been helping people become homeowners since 1934. An FHA insured loan is a U.S. Federal Housing Administration mortgage insurance-backed mortgage loan that is provided by an FHA-approved lender. FHA insured loans are a type of federal assistance. They have historically allowed lower-income Americans to borrow money to purchase a home that they would not otherwise be able to afford. Now, for the benefits or the pros of an FHA loan, be sure to stick around because I'll be reviewing some more cons of the FHA loan as well. But for the pros, for the first pro, FHA offers a low down payment option. And what does that mean? When people say low down payment, like what number does that mean? Well, FHA allows for a 3.5% down payment. And the cool news is that down payment can actually be gifted from a family member or relative, or can come to you in conjunction with some type of local down payment or state-funded down payment assistance program. So there's a lot of different options about how to come up with the down payment on an FHA, but the low down payment is the key, 3.5% of the purchase price. That is fantastic. And that will help homeowners, especially first-time home buyers, or maybe buyers that had life happen to them and they're starting over, to be able to acquire and purchase a home for their families with low out-of-pocket costs. Pro number 2, FHA is much more user-friendly when it comes to credit scores. And by that, FHA will actually lend down to a 580 credit score with still the minimum down payment of their program. And in comparison to other loan programs, the credit scoring guidelines are much lower for FHA. And the other cool thing about the cost of the mortgage insurance on an FHA loan is that it's not driven by credit score. So when we're talking to a family who maybe has lower credit scores, FHA can be a great option because the interest rates and the cost of the mortgage insurance aren't as impacted like they are on a conventional home loan with lower credit scores. And pro number 3, when we talk about credit scores, on a conventional home loan, credit score drives the interest rate. I mean, it is just 100% how that interest rate and the cost of the mortgage insurance is going to be driven on a conventional home loan. But on FHA, it's not the case. So if we have somebody that has a lower credit score, let's say it's a 640 credit score or a 620 credit score, when we look at FHA and we look at conventional loans, you're going to see that FHA offers a better rate and again, a fixed mortgage insurance cost in that type of scenario. So FHA is definitely one of those programs that when you're talking with a home lender, you want to be sure that they're talking FHA and they're evaluating the difference for all of the loan programs that you have access to. Pro number 4, FHA is much more user-friendly when it comes to debt-to-income ratios. So if your loan is approved through the automated underwriting system, many times that system will allow for a higher debt-to-income ratio than it would on a conventional loan. Another benefit to an FHA loan is when life happens, and this happens all the time to people across the country. You know, people get sick, people pass away, people fall in hard times, people lose their jobs, just stuff happens in life. And so if life has happened to you and you've had a bankruptcy or a foreclosure or a short sale, the waiting periods to be able to buy again for FHA are much, much more lenient than when compared to a conventional loan. So for FHA, if you've had a bankruptcy, it's only a 2-year waiting period after a Chapter 7 bankruptcy. And if you've had a foreclosure or a short sale, it's only a 3-year waiting period after that event has occurred. So that is really, really important, especially coming out of, a pandemic and stuff has happened to people. I would hate for somebody to think that they can't buy a house because of a life event. So getting the straight scoop about waiting periods, about credit scores, about a whole holistic kind of approach when it comes to home lending, that's what this stuff's about, and that's why I'm sharing this information. All right, so now for the cons. Yes. Every home loan program has pros and cons. So here are the cons for FHA. The way that mortgage insurance works on FHA is twofold. One, FHA is going to charge what is called upfront mortgage insurance. It's currently at a 1.75% fee, and that cost gets financed into your loan and amortized over the term of your loan. So that's mortgage insurance level number one. Secondly, mortgage insurance is going to be paid monthly under FHA's annual mortgage insurance premium, and that is going to be calculated on an annual basis, but that's going to be paid monthly with your house payment. Now, here's the deal. If you're putting less than 10% down on an FHA loan, that mortgage insurance is going to stay on the life of the loan, which means that it's not ever going to drop off when your market value reaches a point where you have 20% equity in the property. That's a conventional loan. That's not an FHA loan. And there's a lot of confusion out there because most people think, well, once I get 20% equity in my property, I can drop the mortgage insurance. That may be the case if you're on a conventional home loan, but not on FHA. So with FHA, there's usually a reason why a person is getting into an FHA loan, and it's going to be one of those conversations that it's still probably going to make sense based on that credit score or life event, etc. But at some point, once you do have equity in the property, it's a great idea to just take a peek, talk with a lender, and really evaluate, does it make sense to refinance out of FHA, be able to drop the mortgage insurance if you have that 20% equity position, and look at moving over to a conventional loan. So sometimes FHA loans are stepping stone loans, and it's okay. But I want to be clear that you understand the difference on how mortgage insurance works, because that is definitely one of the difference between FHA and other home loans out there. Con number two, FHA is only for owner-occupied primary residences. So this is going to be a home that you're going to live in as your primary home, and you're going to occupy it full time, and you're going to sign and commit that you're going to live in this house as your primary residence for 12 months. And that's what you're going to sign at the close of escrow on the deed of trust. Now, con number three, this one will move year over year, but FHA sets loan limits by county. And many times the FHA loan limit is lower than the conventional conforming loan limit. So it's one of those situations that if you have to use an FHA loan, you might be limited on what you can borrow based on your county's loan limit. So now you know the pros and cons of an FHA loan. Please do me a favor and subscribe to this channel for more valuable mortgage education. I want to make sure that you are informed about your buying decisions, your home loan options, etc. So be sure to subscribe and become part of our community. If you got value out of today's video, please give it a like and don't forget to share. See you next time.